British real estate. Hi everyone and welcome. My name is Adam Wojnar. I'm now sitting in the Czech Republic and I sell properties, investment properties in the UK for investors who live in the UK, who live in the Czech Republic, who live in Slovakia and elsewhere. What will today's webinar be focused on? How to generate passive income from real estate, become a retiree in the meantime and build intergenerational wealth. Sounds good, right? I would also like to ask for a moment of your attention. If you have a mobile phone at hand, please mute the sound. Turn off the radio, close the doors, so that you are simply not disturbed. No one is disturbing you and we have each other's attention. We have peace and we can start. So let's dive into it. The webinar will consist of 4 main parts. The first will be an introduction of who I am. In the second part, we'll look at the yield pyramid according to the 4 types of rent and discuss portfolio building. The third part of this webinar deals with portfolio building and intergenerational wealth. We'll talk about the structure of real estate purchases, SPV, family investment companies, or investing in your own name. The fourth part of this webinar concerns a case study. We'll look at the real estate of my clients. We will look at one model example and briefly discuss rent-to-rent strategy. My name is Adam Wojnar. In 2002, I finished my military service as an ambulance driver and worked as a salesman in a store. Then I worked as a store manager responsible for a team of people. This is when I bought my first car, very old Skoda, for about £350. The reason I mention this is to show you that money, finance, savings, investments was not something that I was not good at. I was really rubbish at it, to be fair. It was unnatural for me to save money and invest. I had to learn it. It was not something I knew or picked up from family or from society where I lived. Quite the opposite. I moved to England from the Czech Republic in 2004. I took a bus there and spent almost 30 hours on the road. 3 months after Czech Republic joined the EU, I found myself in a completely foreign country, literally. From 2004 to 2008, until I started my first business, I exchanged 13 jobs and moved 10 times across Manchester, between Manchester and Czech Republic, and then back to London and back to Manchester again. Not that I was not wanted in any of those jobs, quite the opposite. The reason for the change was that the jobs completely stopped satisfying me, fulfilling me, and I wanted to do something completely different. I literally couldn't stand it after a few months. I used to struggle with finances, often having 0 balance on my bank account and frequently having debt on my credit card. So you can imagine that 0 at the end of the month would be quite good achievement for me. However, when I met my future wife, who had a better financial situation and better financial habits, I began to learn about good financial habits as well. It hurt. Immediately, I got a second job, saved my first few £1,000s and started a property rental business in Manchester. I began by renting out individual rooms, called HMO business, and rent-to-rent as well, to Czech and Slovak immigrants. That was before Brexit, obviously. Eventually, in 2011, I purchased my first investment property in Manchester. In 2018, I started a project called bohatydikyrealitam, which I would translate rich thanks to real estate, which aimed to educate beginning real estate investors. Now I offer investment opportunities in the UK with a monthly net yield of over £300 British and return on investments between 6 and 7%. In 2023, I launched a new service focusing on rent-to-rent investments, which offer the opportunity to invest between 8,000 and 13,000 British pounds with a high return on investment. I recommend subscribing to my email newsletter on my website for more information on this and other topics related to the UK investments. Now we'll focus on the yield pyramid, the cash flow pyramid also known. 4 strategies that real estate investors can choose from or combine them. We'll discuss long-term single-let rentals and take a look at HMOs, house of multiple occupations, renting out individual rooms. We'll briefly examine short-term rentals as well. The bottom 3 levels involve purchasing property, which is a real estate transaction. Here, the investor actually buys the property and it is transferred in the land registry. This investment is secured by the property itself. The 4th level on the top of the pyramid, I didn't know why I put it on the top actually, rent to rent is at the top. Here, the investment is not secured by any property. The investors only buy a contract. Therefore, only between £8,000 and £13,000 is invested here. The investor buys the opportunity to rent out the property for a predetermined period. The investor pays the property owner the monthly rent throughout the entire rental period. They pay it on monthly basis. They don't pay it in a lump sum, 12 months for the next 12 months or anything like that. The rent is paid on monthly basis. It is up to the investor to find a tenant. The goal here is to rent out the property for several times the usual monthly rent using platforms, for example Airbnb, Booking.com and many others. A manager is hired to ensure that the house or apartment is fully occupied. The investor doesn't have to worry about it, which is a significant advantage. This service is truly excellent. This is possible with short-term rentals. The investor keeps the difference between what they pay the owner for the rent and what they receive from the tenant, minus the costs of management, licensing, cleaning, taxes, bills, and so on. We'll not go into more details here. The biggest problem is that most investors are at the very bottom of the pyramid, at the very bottom of the food chain, as I call it. I would say that the single-let is second most conservative investment people make after investing in land. Investors don't invest in it because they believe it is the best real estate investment, but because they lack the knowledge about other possibilities. Many investors are satisfied when they don't have to pay anything extra on their investment or when they pay lower amounts each month. Many people don't mind and consider it normal. Many people have to pay and sponsor, as I say, their investment because the bills and the mortgage and other things are higher than the income from the property. But it doesn't have to be this way, as I will show you in a minute. It is possible to earn a decent monthly income in the property investment business. At the very bottom of the pyramid is conservative investment. This involves buying a flat or a house and renting it out to a family on long-term basis, also known as a single-let. I call this strategy the family strategy. And on my website bohatydikyrealitam.cz you can find properties like these with a monthly income of around 300 British pounds net for a price between 50 and 60k. If the property price is higher, the monthly income should also increase. Cheap properties often mean a higher monthly income, but as you go higher in a purchasing price, the income increases but doesn't exactly match the increase of price. On the other hand, more expensive properties tend to appreciate in value faster and more, but the monthly income is usually lower, if any. Therefore, there are additional strategies to increase income for the investor. A 6% return on investment should be the basis, should be something where the investor starts, not ends. The second level of renting is HMO, renting out individual rooms. These properties are usually more expensive, starting at around 100k. The more rooms, the larger the property and the higher the price. 1 or 2 rooms are not enough for this type of rental. The more rooms the investor have, the more an investor can earn. This can include students, workers, people working odd jobs, on business trips, etc. Or it could be younger people who can't afford their own housing and want to become independent. When I had over 100 tenants during my business in Britain, it was this strategy that I used the most. I didn't have any students there. I had workers from the Czech Republic, Slovakia, and occasionally tourists or other workers, including locals or from Italy, Spain, and elsewhere. But we can go even higher in the pyramid. The percentage yield to the investor increases. My intention is to search for properties that meet the family strategy, single let, with at least a 6% return on investment in the form of cash flow, as well as appreciation and price growth. Currently, we are only discussing cash flow, specifically monthly income. My goal is to search for properties that fulfill at least 2 levels of this pyramid. The aim is for the investor not to be reliant on short-term or long-term rentals alone. Additionally, the goal is for the investor to be able to change their rental strategy without having to sell the property, allowing for open possibilities. In such cases, both the property and its location are crucial. If anything happens to the market, such as a decline in tourism or the closure of universities, the investor can always switch strategies and still have a long-term tenant. They would always cover their costs and still earn at least 6% without giving up the potential for more income. This is the outlook that guides my collaboration with investors. For investors who only have a property for a single let strategy for families and is not located in an area suitable for short-term rentals, there is no need to worry about. If you already have a property that suits only the very bottom strategy of this pyramid and is not suitable for anything else, don't worry about it, because the pyramid doesn't have to consist of only one property, and there can be 1 or several properties at each level. This would be diversification within the portfolio rather than within a single property. This approach allows the investor to have an advantage in achieving higher returns, which is the ultimate goal. At the end, there is, or on the top, there is rent to rent. It is a more risky investment. It is an investment that often experiences seasonal fluctuations and is dependent on either tourism or people traveling from work. It works similarly to a hotel. Therefore, there are fluctuations and a higher risk, as this investment is not secured by purchasing the property. The investor doesn't own the property and has no asset here. They only commit to paying rent for a predetermined period, often 3 years or 5 years, with a 2-month notice period. On the other hand, they don't need millions to invest, which is good news. Now, let's focus on the year 2050. It's good to think about investment in the long term and to set a time horizon. I'm here to offer services to investors who are thinking very long term. They want to hold the property for 10, 20, 30 years and more. In 2050, the investor may have owned a property for 27 years had they invested in 2023. That will generate income and can look at passing the property or portfolio of properties on to future generations. Now, step 1 is preparation or start. This is where learning and education come in. This is the reason why the Rich Thanks to Real Estate, my website, project was created. I have written 2 editions of a guide for starting investors, which are also available as ebooks. I have also created online courses, and I offer consultations and have conducted workshops and seminars. Currently, I focus more on selling investment properties in the UK to people who live in the UK or across Europe. On the second place is start. At this stage, the investor has gained some awareness of the realities and can begin building their capital. They can be active at a business aspect to their investment and dedicate time and energy to their investments. This can be an advantage of rent-to-rent accommodation, which they can even do themselves on their purchased property. It works in loads of countries. It's not just about Britain. I can imagine this strategy, rent-to-rent, can work in every country in Europe or elsewhere. You can have a daily job out of it, just as I used to have in Manchester when I had 100 tenants, and it was my main activity. It was a daily job, and I eventually employed several people. I learned a lot about real estate during that time. This is how an investor can start accumulating capital before investing and before moving to the third stage, where they can already have a portfolio of properties that will take care of them in the future. When they build this portfolio, they can become a landlord and professional landlord and choose whether they want to continue working or selling the business or keep operating it and have their free time back that they once had before starting their careers. 4 is reference to building a family jeweler, a family estate. This is where properties come in. I understand that if you are 20 or 30 years old, it's difficult to think about it in the long term. But then all you need to do is buy a property, for example, just for the company, and then the estate is more easily passed on to the future generations. Descendants can continue to build a portfolio if they have the aptitude for it. Or the investor can sell part or all of the portfolio and then buy ETF funds, for example, and invest completely passively. The sky's the limit. It's essential to have more options. Many people don't plan, so they have fewer opportunities during their careers. And this is where I see the long-term investors win. Longer investors win, I am convinced. You cannot have a functional portfolio of properties and be worse off. SPVs. SPV is a form of limited company. The purchase of property can be made in the individual's name, and the investor will therefore buy properties in the UK in their own name. If purchasing property through an SPV company, the property will be bought in the name of the company. This is a company established for the sole purpose of one property, in this case, the purchase of the property. Each property has its own SPV, as multiple properties can be held within one SPV. It is recommended to have one SPV per property for long-term protection. This is a standard practice in the UK. SPVs are able to be financed in the future by mortgage. If you live abroad, you are non-UK resident, you live, for example, in Germany, Austria, Czech Republic, Norway or elsewhere, you can buy via SPV in the UK for cash, and later on you can decide anytime you want to, after owning the property first 6 months, that you want to contact the local bank in the UK and apply for a mortgage and get finance. This finance could be used for purchasing another properties, or you can buy the first class ticket and travel around the world. It's up to you. Now, we have FIC, a family investment company. It's an entity used as a vehicle to hold, protect and invest family wealth and provide for flexible extraction of funds. Family investment companies are increasingly popular alternative to trusts, enabling family wealth to be passed to younger generations whilst allowing the founder to retain control of the assets. A family investment company can also offer increased asset protection with respect to the creditors and on divorce. What is a family investment company? A UK resident private limited company. The shareholders are family members, a company that generally invests rather than trades. And it's good for inheritance tax. Shares in the family investment company can be subscribed for on creation, meaning there is no transfer of value. Alternatively, shares in a family investment company can be given to family members, and after 7 years the value of the gift will fall outside of the founder's estate for inheritance tax purposes. Family investment companies are not subject to the 20% entry charges and 10 yearly charges for inheritance tax that are applicable to trusts, which is really good advantage. Tax efficient accumulation of wealth, income and gains are taxed on the family investment company at the corporation tax rate, currently 19%. This rate is much lower than the current rate of income tax for trusts of 45% and the higher and additional rates of income tax for individuals of 40% and 45% respectively. I'm not an expert on SPVs, tax planning or family investment companies by any means. Legal advice is always necessary. Let's take a look at case studies. The first case study is Ascot Street. I was actually in this property with one of my clients last summer when it was undergoing renovation. You can find a video from that time on my Czech YouTube channel. At the end of last year, one of my clients who had already invested with me 3 times bought this property. So this property now belongs to one of my clients. This property brings the investor over £400 net income a month. So it's good to see how it works. The price of the property includes legal services, a 5-year rental license, and advice or consulting services. There are no repair costs because the investor acquires the property after the renovation. The transfer of ownership tax is also included in the property, so there are no other costs. There is a management fee of 10% from the real estate agency plus VAT. Insurance is paid every year. A certificate for the gas boiler inspection must be issued every year as well. It is paid from the rental income. If you look at the cash flow statement, the table in front of you, you can see that all charges, all costs, as I just mentioned, are already deducted from the monthly income. So the monthly income on the bottom is adjusted. If you remember the pyramid I showed you earlier, according to the pyramid, this property falls into the family strategy. This particular property cannot be combined with either HMO or short-term rental because it is located in an area where local people have lived for a long term. It's not suitable for tourists or short-term stays. Now take a look at the video with serviced accommodation. This is how your investment property can look like. This is a video that recorded my business partner who is based in Scotland. HMO. Now we are moving into HMO mode, which means renting out individual rooms in a property. This is a property that my client purchased recently. The investor will earn a decent amount of money even every month compared to the purchase price. She acquired a renovated property with my advisory service included in the price, as well as the property acquisition tax. This property is located adjacent to the city of Middlesbrough, which has population of 300,000 people. As you can see on the top of the table, the cash flow table in yellow color, finance, purchase price £82,000, own finance 82 because there was no mortgage involved. My clients buy cash, later on they can refinance and take money out of it if they buy in SPV structure. You can see all the costs like solicitor fee, license, refurb. We had to do some little adjustment to the property, that's why there's refurb cost over just £1,000, broker fee, stamp duty, land tax, etc. What kind of properties are we talking about? If we go back to the cash flow pyramid, we have rent to rent at the top. There is no real estate transaction, if you remember, involved, but this investment can be acquired for as little as £8,000. Next is short-term accommodation. There is properties that are typically purchased for £50,000 to £70,000. There is a real estate transaction involved and the investment is backed by the property. The investor actually acquires the asset. So the investor gains a long-term asset that can be passed down to to future generations. Here we see the beautiful profitability, and with this type of property, returns can reach up to 15 to 20%. Of course, this varies depending on the occupancy rate of the property. The worst case scenario are around 17, maybe 15% per year. The more positive scenario are around 35 to 40%. When the occupancy rate is around 75 to 80% of its capacity, it becomes a lucrative investment for a really low investment amount. Now, this webinar is over. It's possible to schedule a video call with me. Just go to my website and bohatydikyrealitam.cz website, or just put in the web browser my first name and second name.cz, adamwojnar.cz, and click on the Sjednat schůzku online meeting button on the advertising page. Look at my calendar and we will arrange a time that suits you to review the part. Thank you very much for your attention, and this concludes the webinar. Thank you for watching. Have a great day.